Welcome to your weekly dose of capitalism and the market update. What do we see when we look at that? Well, we see a very expensive market. Everything in red suggests that it's overvalued. Imagine somebody had a business and they make $1 in profits every year, and you said, I'm happy to pay $109 to buy your business. Would that be a pretty good deal for you? Well, it might be if it was Amazon or Apple or Microsoft, or indeed even Nvidia. Anyway, the things that look cheap at the moment, you'd certainly bite their arms off for, are energy and banking companies. However, the market would disagree with you, because what it would say is, hell, we're buying everything. And it seems to think that the market's on a rip and is at a discount. Well, certainly if you go by the price rises you've seen right across every single sector over the past week. Another measure, of course, of valuation and superior to price earnings ratios is price earnings growth. You want this to be below 1, and those we've marked in green where they are or approach that, and that suggests that what you're paying, given the growth in profits of a company and not just its historic profits, well, green is cheap. And again, not many things are cheap. The Nasdaq is up 41% so far year to date. My clients who are on the Great Investments program, some are up 100%. They've doubled their pension this year, and that's because they've had this tailwind from the Nasdaq and from the S&P, which is up 17% this year. Of course, the Brits are stuck at a 6% return so far. No wonder they're whinging. Why do their pensions never go up and the Americans are so bloody rich? It is annoying, I know, but they could have bought those American stocks. Now, S&P 500, where are we on that? Well, it's rebounded off that support line, so that's all good. And whilst the stochastic weekly and monthly, which is what you can see on screen there, are overbought and suggesting you're going to get some shortward downward pressure, certainly it's not seeing that on the prices. And we're seeing the monthly or dotted blue line, which is the MACD, and I don't use it the way the textbooks do. That's sideways, which is neutral and certainly not negative. And it doesn't look too bad at the moment for the S&P. Am I saying it's going to do this? No, I'm not necessarily saying that. Am I saying it could still fall there? I'm not necessarily saying that. So what am I saying? I'm saying this is probably the most likely trajectory we're going to see at the moment on that. But I do caution you, September is horrendous for the S&P 500. Just look at that. So let's look at some of the bellwethers. And before we do, let's look at the UK markets, which, as I've said for a boringly long time now, is likely to decline. That's the monthly momentum. As I say, I don't use that the way the textbooks do. I look to see if the solid line, in this case, is falling or rising. I don't really care about the signal, though. Sometimes I look at that and I'll explain that, and I'll try and be educational in these as well. Well, there we go. Apple has ended its falls by the looks of it. Now, bang up. And the weekly stochastic suggests we're going to do that, as we have in the past here, as you can see there, where after some falls it had risen. This is sideways, which is not bad, certainly not great. I'd rather it was doing that, but it's not bad. And this seems to have turned up. Now I caution you, and I'll tell you what I actually think is going to happen. Okay, you see this whenever, and I'm going to let you into a little secret here, so come close, and not many people know this. I've written about it in one of my, or several of my 18 Financial Times and other published books. When that MACD, the solid line, gets close to its signal line, which in this case is the yellow line, it tends to do what you can see here. Okay, it comes up to it, it kisses it, and then it drops again. Now, when it did that up here, I'm going to try and draw a straight line if I can, you get a few weeks of upward moves, as you did there, which lets people think, oh my God, this is amazing. It's going up and up and up and up. And then it falls back. I'm not saying it's going to fall back this much, but what I can tell you is in September, despite these rises in Apple, I suspect it's going to do that and then fall back at least to this level, which was the low there. That's our little secret, okay? So it might go up for another week, let's say, and then I think it's going to actually probably fall off. Now, what does that mean? Well, if you put a gun to my head, would I still buy Apple? Yeah, I actually would if you put a gun to my head today. But if you didn't put a gun to my head, I'd probably wait. I'd probably buy pound cost average or dollar cost average. I'd probably buy a third of my position this month, then another next month and the month after. And that's probably what I do as things happen. It might be a bit too nuanced for you, a bit too subtle for you, but actually that's probably the better way to do it. Now, let's move on then. Oh, by this is what the analysts think, as you know. So what does all this mean? That's the current price for all of these charts. That's the average of what the analysts think. And if the analysts are right, then the difference between the current price to what the average analyst thinks, that's the return you'd get. So I'm going to explain that again. Now, what about Alphabet? Is that going to do the same as Apple? Well, no, it's got a different look to it. That's above. You see the blue line is above its yellow signal line already there, and looks like it's going to do this. So if you put a gun to my head, I won't pound cost average into this. I just buy into it straight away. I just get straight into it. Okay, so there's your Alphabet over there, and a lot of people seem to like it. But Alpesh, September's not a good month. Yeah, fine. If you're risk averse, then pound cost average, dollar cost average into it. In other words, a third this month, a third next month, a third month after. But if you're a bit more risk loving, and I think this is warranted with Alphabet, then you just buy all in now. Okay, even if that's what the analysts think. What about Microsoft? Fallen off, risen. What do we think? Now, again, let's zoom in. Let's zoom in. I love doing this. Let's zoom right in. And what you see there is actually the weekly looks like it's coming from above to touch the dotted line, which is the signal line for its own MACD, in which case, what usually happens when it comes from above, like that, and this is all going to sound mumbo jumbo to some people, but these are mathematical operations which look at momentum, is it tends to bounce off it. That's not to say we're guaranteed to do that, but I think we might get a move up, then down, and then eventually up. But anyway, gun to my head, I'd buy all in now. If I was worried, I'd pound dollar cost average, but I have no problems owning Microsoft. Okay, so there we are. And Amazon, well, like Microsoft, coming from above, could easily do this, but it's probably more likely going to do this before going up. And so with something like this, I think we're going to go up, down, up, and then up. All right, so gun to my head, buy it right now, all in, or dollar cost average, but I have no problems holding it, right? And that's what the analysts think. Now, Disney, don't just buy it because of multi-year lows. That's a different strategy. I would wait and see, even though the analysts think 32% to the upside, and even though all of them think buy, September and October are pretty ugly, so I'd wait and see. Not really looking at it right now. Nvidia, you've made a lot of money. You now need to work out how much do you sell based on how much it drops. So if it drops 10%, do you sell 10% or 20% or 30%? You work it out. But as things stand, it is overbought. It's going into great new territory. You might want to take some profits, or you might be risk loving and say, bugger that, mate. Look at this. It always goes up in September, October, November. So I'm just staying in. That's perfectly fine. It's a valid view. Something what the analysts think. Given the AI benefits, it's perfectly legitimate. Tesla has bounced off that support wonderfully well, by the way. Look at that. It's like I'd drawn that ages ago. Seems to be it's going to be doing that. And so, gun to head, would I buy some today? Yeah, just watch out for that. Just warnings, okay? And remember, this was a special situation for us in January, where I put my Great Investments Program people into it. It was therefore slightly riskier, and that's where we are with that one. And the analysts think it's actually peaked. Meta has had this immense run. We got in a bit late there in January, as you know, if you're on the program. Drop back off. Now what? Well, overbought. That's still got room to fall. That definitely is going to fall. If you put a gun to my head, I wouldn't buy this today. I would just keep waiting a little bit. I might dollar cost average if I absolutely had that gun to my head, but I'd probably wait till my next week's broadcast to decide on this one, even though a lot of people think there's some upside to it. Now, with this, and look, this is the interesting bit. You can see it's happened there with ServiceNow. Let's keep a close eye on it. I like it. And it's peaked up now, so hopefully it'll just continue doing that, and there's some upside to it as well. Cisco, of course, blew the doors off. That's up here. This is sort of sideways. It's probably going to do that. Love it, like it, own it. All right, what more do you want me to tell you? There's a whole load of other stocks as well. I could go into like Adobe and everything else. I'll do that for my clients on the private Telegram channel, the Great Investments Program Telegram channel, where I do the long version of this. Okay, so thank you very much for watching, and have a look at my campaign for $1million.com to basically make 1 million millionaires through learning investing. So teaching them how to invest, make 1 million millionaires over the course of their lifetimes by teaching them how to do investments better. Thank you very much.